What is going on, my friends, and welcome back to the Crypto Catch Up. Of course, your number one place to catch up on crypto. Now, I feel like I need to issue a bit of a warning, especially with what we're going to be seeing in a couple hours here, because a lot of people are going to make a mistake that I don't want you to make. Now, I feel like I've been having to issue so many warnings recently, and I'm sorry. I feel like my content's been a little bit, not bearish, but it's just been so warning heavy. But at the end of the day, I can only tell you what I'm seeing. And when moments like we've been seeing, especially within the last week, when all these warning flags are going off, I just have to tell you that I can't just, although I am bullish, I can't just try to get as many clicks and views as possible by just being an extreme bull all the time. I just got to be honest with you, okay? And so that's what we're going to do today. So of course, as I mentioned before, we're going to be talking about something that's happening today that's extremely important, but it is leading people down a road that could get them in some trouble, okay? So I want to explain that to you. And I will also let you guys know, my energy may seem a little bit weird today. I don't know if you guys know this. I don't really ever talk about it. I'm a pro MMA fighter. I have an MMA fight on Friday. That means I have to make weight on Thursday. So I'm losing weight right now. I'm cutting some weight. I don't really feel the best, but I like working, and so I want to make videos for you. But if I seem a little under the weather, don't take it personally. I'm just not feeling the best, okay? So anyway, let's get into the video. Now, guys, don't forget, if you do want to trade on some Bitcoin or, Solana, JASMY, and many more, all the way up to 100x leverage, you can check out the Margex link down in the description below. You will get up to $10,000 in bonuses and access to a $500,000 KASPA airdrop. And the coolest part is when you do sign up, you don't need to KYC, meaning you don't need to tell them who you are. You can just sign up, start trading right then, right there, get access up to $10,000 in bonuses and $500,000 KASPA airdrop with the link in the description below. But Tyler, what are we talking and what are we catching up on today? Well, we are going to be seeing the FOMC meeting beginning today, September 17th, around 11:30 p.m. IST, in which we, of course, will see the U.S. Fed chair will address media at sometime around 11:30 p.m. IST on September 18th. So the next 48 hours or so going to be very, very chaotic. Now, why is this important? Well, the reason why this is important is quite simply just because we are going to very, very likely see interest rates get cut during the FOMC meeting. And many people are shaping this out to be the best thing that's ever happened to the world of crypto. That's automatically going to lead to a pump that's going to send us up to $100,000. And this is the beginning of the bull run. And I want to talk about my opinion on this, what I'm expecting from the market, and giving a bit of a warning. Well, let me start with the fact that I do also agree that the Fed cutting interest rates would be a good thing for crypto from a macro sense. Okay. In the grand scheme of things, it is a good thing. Why? Because in periods in which we enter into quantitative easing, which is when they're reducing interest rates, they're making money easier to access. That's kind of the way that I see it, right? Money easier to access. It's cheaper to access, therefore quantitatively easing the economy, right? When we enter into a period of QE, typically speaking, risk on assets will perform better over an extended period of time, quite simply because money becomes easier to access. People are more willing to take risks. That is true, right? That is a true thing. And so, of course, because of that, I do believe that over the grand scheme of things, this is a good thing for the market. But the issue here is that people are expecting that this is going to be an immediate catalyst, almost like for some reason this is just going to inject a bunch of money into the economy, and then people are going to take that money and invest it into crypto. And I'm here to just tell you that's not going to happen. And I actually have proof that this is how people think. So before we continue on why I don't particularly think that's going to happen, let me show you the proof. The proof that I have is what we're seeing in liquidation levels, because it's a direct reflection of what people are doing right now in anticipation of this FOMC meeting. Currently speaking, on the 30-day liquidation map, the 7-day liquidation map, and the 1-day liquidation map, we will see more liquidations if this market goes down than if it goes up. And the issue with that is the only way that this happens is that if people are betting heavily, and especially on high leverage, that this market's going to go up. Because again, if it goes down, they'll get liquidated. And typically speaking, this market will liquidate as many people as it possibly can. And so in moments in which we have the 1, 7, and 30-day periods all showing higher liquidations to the downside than the upside, it means people are typically overly leveraged. They're just betting too much that this market's going to go up. And from a technical perspective, we have not seen enough from Bitcoin to justify this type of liquidation levels to the downside, simply put. And so, of course, knowing that people are over betting to the top side, it means people think that this is going to be an immediately bullish catalyst that is going to lead this market upwards. Now, the reason why I don't believe that to be the case is because factually, it's not the case. Factually, quantitative easing, just like quantitative tightening, takes time. Of course, it has to immediately, it has to happen. Then it needs to fill the results, fill the results, fill the results. Then we're going to start to see it start to affect businesses. Then we're going to start to see it affect kind of like that middleman. Then we're going to start to see it affect retail as a result of the impacts to those businesses. It's not just people just putting money in our pockets. Now, sure, if they do a stimulus check, that's different. That is immediately, boom, here's liquidity. That's not what this is. That's not lowering of interest rates. That's not what that is, right? The easiest way you can think about it, they lower interest rates. Typically, mortgage rates will go down so people can buy houses and get a little bit more money every month on their mortgage. That's not immediately giving them money. That's just saving them a little bit of money. And that's the whole goal, right, with quantitative easing, is to start saving people money. So first, it's not immediate. That's not how that happens. Secondly, you have to think about the macro environment, the macroeconomic effects. What's happening right now to cause quantitative easing? Typically speaking, you will only see things happening like interest rates falling during a time period in which something bad is happening. Of course. Why? Because they have to make things easier on the economy because the economy's breaking. Simple as that. And so what you have to understand is that oftentimes quantitative easing only begins when the economy starts doing really poorly. Whether that means that we're seeing a lot of layoffs, whether that means that a lot of people are foreclosing on their homes, people are not being able to pay off their debts like credit cards, people are starting to not be able to afford to live, we're seeing homelessness go up. Things like that are typically what cause quantitative easing. And so in a period in which we are seeing them reduce interest rates, it's oftentimes, and just like right now, due to the fact that the economy's not doing good and people aren't doing good. And so of course, yes, sure, this may be a good thing to help them over time, but right now, people aren't doing good. And so you have to understand that typically speaking, it's not just going to make everyone just start magically doing good and have money to invest. That's not how that works. It takes time. Now, the third reason why this isn't going to be an immediate effect on crypto, I don't believe, is because we could see some type of volatility come from the stock market. People will oftentimes say, well, quantitative easing and say interest rates dropping historically is negatively impactful to the stock market. That's not true, but it could have some short-term effects because of what I said in reason number 2. What you have to understand is, in a moment in which we see quantitative easing, okay, in a moment in which we see mortgage rate or interest rates going down, okay, what oftentimes happens is, as I mentioned before, number 2, it's a result of a bad economy. During times of a bad economy, people are spending less money. When they're spending less money, what happens? Companies' earnings go down. When their earnings go down, their intrinsic value goes down. When their intrinsic value go down, what has to go down? Their stock price has to go down. And so oftentimes, around the time where the Fed has to cut interest rates, we're seeing earnings going down, stock values going down, stock market going down. And so sure, we'll have that negative impact immediately, but it's just because there is correlation doesn't mean it's causation. Just because, of course, the interest rates are being dropped doesn't mean that's what's causing the stock market to fall. That's not the truth. The cause is actually the same thing. It's the same input. The input of a bad economy is causing interest rates to go down and causing the stock market to fall. And if that stock market does fall, it typically will have an effect on the crypto market because for some reason, they are still somewhat tied. It's just assets that people invest into to make money. And that's the whole point of it. And so because of those 3 core key reasons, you have to understand that this isn't something that's just going to send us up to 90K or 100K. That's just not usually what should happen in this situation. And sure, it is possible. Anything's possible in crypto. But going to the extent of betting so high that you're going to get liquidated if we make a $2,000 move to the downside by the tens of hundreds of millions is irrational. It just doesn't make, it's nonsensical. And so because of that, I just want to issue a warning saying if you're one of those people who has a huge portion of your portfolio long on leverage currently with close liquidations, you're setting yourself up for possible failure. I'm not saying that Bitcoin might not, it might go to 70K, right? It could do that. I'm not saying it's not. I'm still dollar cost averaging every single day in September. But taking a risk like that is ridiculous because in the grand scheme of things, from a macro sense, quantitative easing is good for crypto, but it takes a while. So why would you rush it? Why would you risk losing everything in the short term when you have a much more highly guaranteed chance in the long term? Makes no sense. Makes no sense. It's stupid. And so because of that, that's my opinion, and that's what I wanted to warn you about today. So let me know in the comments down below. Before you go, what are you doing right now? Are you longing? Are you shorting? Are you holding? Have you been dollar cost averaging? What are some things you're buying? I'm kind of bored, guys. I got a freaking weight cut coming up. I got nothing to really do during the day. So I want to have conversations with you guys. So let me know down in the comments below. What's your game plan? What are you doing? And what are you up to? And of course, I hope you guys did enjoy today's crypto catch up. And I can't wait to catch up with you all in the comments. Peace out, everybody.